Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down a wild day in the markets. We've got a lot to unpack with geopolitical headlines driving massive swings, a sharp rally in major indexes, and some standout movers in the large cap space. So let's dive right into the action and see what's shaping the landscape for us long-term investors, while also keeping an eye on the short-term noise. First up, the big story of the day is the geopolitical roller coaster out of the Middle East. Reports of productive talks between the U.S. and Iran, as announced by President Trump, have sparked a wave of optimism, despite conflicting statements from Iranian officials. This news triggered a dramatic shift in sentiment, with markets reacting to a potential de-escalation of tensions. But let's not get too comfortable. Analysts are cautioning that volatility remains high, especially with the Strait of Hormuz still a flashpoint. For us long-term folks, this is a reminder that global events can create short-term noise, but they also open windows of opportunity if you're patient. Speaking of market reactions, let's check the major indexes. It was a banner day across the board as the Dow Jones surged over 1%, climbing more than 600 points on the back of this geopolitical relief. The S&P 500 wasn't far behind with a solid gain of over 1%, while the Nasdaq also jumped more than 1%, showing tech isn't sitting out this rally. Even the Russell 2000, representing smaller caps, outperformed with a nearly 2.3% pop. This broad-based strength signals risk-on sentiment returning, at least for now, and it's a positive sign for those of us building wealth over the long haul. Though keep an eye on whether this momentum holds. Zooming in on the S&P 500 for a moment, it's worth noting that despite today's bounce, the index had recently slipped below its 200-day moving average, a key technical level watched by institutional players. This breach earlier in the week spooked some investors, but today's recovery suggests we might be seeing a short-term bottom. For long-term investors, this is a classic example of why technical levels matter as entry points, but shouldn't dictate your entire strategy. Stick to fundamentals and use these dips as potential buying zones. Over on the Nasdaq, tech stocks are catching a bid today, which is a relief after weeks of pressure. The index's 1.4% gain reflects renewed confidence, especially as some big names in AI and semiconductors showed strength. As long-term investors, tech remains a core growth driver, but with volatility spiking, it's wise to dollar-cost average into positions rather than chasing every rally. Let's talk winners now. Among large caps, Palantir stole the show with a nearly 7% jump, fueled by news of Pentagon backing for its AI platform expansion. Broadcom and ASML also flexed their muscles, each up around 4%, riding the ongoing AI infrastructure wave. These moves highlight how certain sectors, especially tech and defense-adjacent plays, can thrive even amid uncertainty, something to consider for portfolio diversification over the long term. On the flip side, not everyone joined the party. Micron Technology stumbled over 4%, despite solid earnings chatter, as investors seemed to lock in profits. Energy names like Equinor also took a hit, down more than 5%, as oil prices cooled off with the Iran news. For us focused on the long game, these pullbacks in strong companies could be moments to watch. Don't rush in, but keep them on your radar for when sentiment stabilizes. Checking the most active stocks, Nvidia and Tesla were buzzing with heavy trading volume today, each posting gains of around 1.7% and 3.5% respectively. Palantir also saw huge activity, reinforcing its breakout status. High volume often signals institutional interest, and for long-term investors, it's a clue to where the big money is flowing, worth noting for strategic allocations. Looking at the broader market movers, Amazon climbed over 2% amid analyst optimism despite AI spending concerns, while Petrobras gained 2.5% as oil dynamics remain in focus. On the downside, Micron's drop stood out among the heavyweights. These movers remind us that individual stories can drive outsized impact, and as long-term players, it's about separating temporary setbacks from structural shifts. Shifting gears to earnings, we've got a busy week ahead with some big names reporting. Keep an eye on Micron Technology, expected to post strong results tied to AI demand, and FedEx, which could offer insights into global shipping trends. Carnival Corporation is also on deck, and with travel stocks rallying today, Their update on fuel costs and demand will be key to watch. For us long-term investors, earnings are less about the quarterly noise and more about confirming if a company's growth story remains intact. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports and what they mean for your portfolio. Peeking at the past week's top performers among large caps, Garmin led with a stunning 21% surge, while AppLovin and Shopify each gained over 14%. These weekly movers show where momentum is building, and for long-term strategies, they're a reminder to check if such gains are backed by fundamentals or just short-term hype. Conversely, the week's biggest losers included Genuine Parts, down over 20%, and Rivian, shedding 14%. These drops can sting, but for us with a long horizon, they're often a chance to reassess. Has the story changed, or is this an overreaction to temporary headwinds? Wrapping up with sector performance over the past week, industrials topped the list with a 2.1% gain, followed by consumer cyclical at 1.6%. Energy also showed strength, up over 4% for the week, despite today's pullback. These trends suggest pockets of resilience, and for long-term portfolios, rotating into outperforming sectors during dips can be a smart play. On the weaker side, healthcare lagged with a 0.6% decline over the week, while utilities and financials also underperformed slightly. These sectors might face near-term challenges, but remember, weakness in one cycle can set up strength in the next. Keep a balanced view for the long haul. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the ups and downs with a clear, long-term perspective. Don't miss our next update for more insights. And be sure to check out MarketSnap for exclusive summaries and SWOT analyses to keep your investment game sharp. See you tomorrow.